and then we can move on from there. Okay. I want to believe you also can see my screen. I want to believe you can see my screen.
Yes, yes.
Okay, great. We'll be looking at, firstly, we'll be looking at market structure, right? And then I'm sure this will be a reminder because I already dropped I already dropped tutorials in that regard for us. That was I did that at the end of the week. All right. Basically, every time we look at the market, we have to always expect three basic forms of movement: either an uptrend, a downtrend, or a consolidating market. That is, there's no significant difference. Uh, you know, pardon my drawing skills. All right, so here is clearly an uptrend here. Here is a clear downtrend. All right, and then looking out for all of this. I'm gonna just mute everyone. Okay. All right. So every time, and then our expectations from time to time should always definitely be looking at the market for where the market is, and then trying to make advantage with the present situation of the market. The truth is, but most times what we are trying to do is we're trying to condition the market to do what the market is not ready to do. Or on the other hand, we are taking, how do I put it? We're taking too much of a risk. Yeah, and I said what I'm saying in essence when I say we're taking too much of a risk is that there are times whereby the structure of a particular market is predominantly a downward trend. Of course, there will be buying opportunities because the market doesn't just go south because okay, it's meant to be a downtrend. Then you expect okay, it should just go all south. No, it's not going to happen that way. If you can see it right here, we have an upward trend all the way for gold here. All right, and then in the midst of the upward trend, we're having downtrends, we're having pushbacks, and then this seems to be like the peak. And I'm on a daily time frame. Let me make that more obvious. I'm on a daily time frame, so you can see that now. All right. Now this is the outlook for gold so far on a daily time frame. And then, but what we are seeing presently, what the market is doing right now, for a while now, is a clear downtrend. And then, if you are looking at this market, what do you want to first do? You want to mark out the present situation of the market, right? It's obvious that we have an exhaustion of of the upward trend, right, from this particular point where we are. So let's try as much as possible with a trend line to just mark out the major areas of activities. We can only try as much as possible to mark out the major areas of activities. And then I'll be using, you will see how I'll use my trend line and then my horizontal line at the same time simultaneously to be able to mark out my strong zones. That is the zones of importance to me in the course of the trade. Look at this right here. This is for us a double top. If you've got questions, please just note them. And then at the end of this, I'm going to take them. This is one top. Then we have a pushback. And then this happens to be another top. This is a double top. And you can see I placed my horizontal line just to mark out that zone. It has become a strong resistance point, for gold. On the other hand, a trend line that we just put up, also happening from that point onward. Now, at the bottom, what do we see? And then I'm sure if you have watched the market structure class, you know why we say we are in an uptrend or a downtrend. Clearly, because we're seeing if we're seeing consistent lower lows, that is, the market is continually creating lower points that are lower than the previous point. It tells us that what the market is in a downtrend. That's the predominant trend in the market at that time. And on the other hand, once the market is creating highs that are higher than the previous highs, it tells us that what we are in an upward trend. So that said, this clearly shows from this high point, the market has failed to create a point that is higher than the previous one, and then we're having consistent lower lows. My expectation, if you are familiar, for those who trade, geometry, I don't think anyone, I'm not sure, I'm not sure anyone in our group would be trading based on geometry. But for those who trade geometry, they call this kind of movement a smooth and swap movement. And then this again is just to show that you don't enter into a trade based on one reason. So you are seeing how I'm trying to build up my purpose and then my point to enter into a particular trade. Okay, so I'm going to do all that build up. These are all the things I get to look out. That's why I don't. Most times you're going to see our signals in an entire week not revolving more than 2 or 3 pairs, because if you want to do a thorough analysis like this, it's going to be very very difficult for you to try and run it on several pairs at the same time. You end up wasting your time and not, you just find out that every week in week out you're only analyzing so much but doing nothing. All right, that said, for those who trade small and swap, this is a very important point. This is an important point. This is an important point. Then, by that theory and philosophy, the first expectation for price, they should be expecting that price should come back to this region. Of course, I'm on a daily time frame. This is not going to happen over the night. It's not something you're just going to see happen. But the long term expectation, based on what we are seeing right now for gold, except a break of this structure happens, is that gold should be coming towards this region. However, the sell is not just going to happen over the night and then, because if you look at this uptrend for an example, this is each candlestick here represents a day. This tells us that this has happened over the course of several months, right? Happened over the course of several months. As a matter of fact, from May to around September 4th. So you might expect that what it also goes down over time. It's not just going to happen um just at once. So that said, my expectation right here is to have gold come down to this region because of what I'm saying. So because it's meant to come to that zone, does that mean we just go ahead and hit the sell button? No, we still have to look out for, number one, to manage your risk and control your entry points. All right. Now, the next thing I want to look out for is what's the predominant zone that has been broken or retested, or zones that needs to be rebroken and retested. And I found one here. The more you get to look at the chart, the more you find them, honestly. This is a very, very good support region, and then I'm going to explain why. Look at price getting to this zone. Look at price failing to go below. Here, price came below this zone, but look at price reacting backwards, coming back right above that line. Are you getting it? It shows me that this is a very significant zone, right? Price broke, but the candle that came to retested, but however, it created an upward momentum again. Tells me this is a very, very important zone. Look at price touching and never coming way below it. And then here you have price broke through. Look at the candle that broke through right here, way different from the kind of candle we have here. And then we have another candle closing, the entire body of this candle closing beneath it. Then price came down, right? Look at this pushback. So we have a pushback right here, a retest. This is a proper retest of this horizontal line that I've drawn, confirming that what, and price failed to close above it, confirming that what we are still in a sell momentum for this particular pair. I just want to see how far this has gone already. From that particular point, I think it's about 200 and something pips already. Never mind, we're on a higher time frame, so you're bound to see stuff like that. So right now, what's at the back of my mind is a new entry position. Never forget, in a downward trend market, we are looking for sell opportunities. Not that there won't be buy opportunities, there will be loads of buy opportunities, but the movement for buys will be shorter, and then it's a bigger risk for you to be buying in a selling market. Always put that at the back of your mind. Most times when you look at how your trade goes and then you find that maybe something went wrong. Most times if you look critically, that's why anytime you hit a stop loss, don't just move on to the next trade. Analyze it and go to see why you are hitting a stop. Let me quickly go to a lower time frame, maybe like a 1 hour. Let's see what's happening. All right. If you're on a 1 hour time frame, this automatically is a higher high, right? This is an higher high on a 1 hour time frame. And then for someone who is looking short term, already sees a higher high because you're on a lower time frame and you're seeing, okay, it's like a break of a downward structure. Are you getting it? And then you want to start taking a buy bias. It's too early to try to do that. That's why always better to do a top-down analysis. Come from a higher time frame. Of course, going weekly is may not be of great importance. However, if I'm seeing a clear downward structure on weekly time frame or on the monthly time frame, and then on daily I'm seeing a buy structure, it also tells you to still be very, very careful because the higher this, the time frame, the more accurate whatever it is that you are seeing. So that's why it's better you do a top down, not a bottom up analysis when you're trading. All right, so I'll go back to the daily and then try to continue what I was saying. All right, so look at this right here, and then still looking at this. What am I seeing? I'm already seeing that what uh this the last candle that closed before the week showed that there was a bullish push, right? There was a bullish push. Sorry, that's my baby. There was a bullish push. However, you could see there was still a sell push to bring down the price. I mean, to bring down price, and then that candle could not close uh fully. The body of the candles it still had wicks at the top. And anytime I'm seeing wicks, it's already telling you that what there's a lot of activities, a lot of rejection of prices, and you can look at all these places. You can see the wicks, you can see the wicks clearly. So it's telling you that what there's a push down. There's a lot of price reaction happening at that region. All right. So now this is what we'll do. We'll go down to H4 to try to see what's happening on the on the for the now, because we want to look out for an entry opportunity. Don't forget we have itemized on the daily that this horizontal line has been a very strong support zone, and then now it's been broken on the daily and then retested on the daily. Excuse me. It's been retested on the daily time frame, and then we have what we have right here for this particular trend, and you could see this happening on H4. So we are still looking out for what sell opportunities until we have a break of this downward structure. All right, so I'm still going to work with this horizontal line and then look out for more support zones. All right. So sorry, so sorry about that. Yeah. Look out for more support zones right here, and then because what we want to do is we want to sell from the resistance rather. We want to sell from the. I'm sorry, I was distracted at some point. We want to sell from the resistance point. This particular resistance point. We want to sell from there. All right. So having this right now, then if I want to use my fib, I like to go on MT4 to use my Fibonacci to try and see to what extent of retracement we currently have, and then when or how I can get to initiate my trade. All right, just hold on, guys. I'm going to share my MT4 screen right now so we all can see. Okay, so I'm on MT4, and then right here, I want to zoom in a little. I want to zoom in a little, okay, which I've done. Still on my H4 now. Okay, let's pull a few first on the D1 time frame. And then of course it's a downtrend, so you're taking it from top. You look out for, use your period separator. If you want to do that as a shortcut, it's Control Y. So this marks the period of interest. Uh, you use a previous period to judge an incoming period. So this period is complete already. We use this complete period to judge this period that is about to be completed. I'm sure by the end of December, we'll have the completion of this period. Don't also forget, this is December already. There's going to be lots of holidays all around the world. Don't put all your money in the market in this period. It's not really a wise decision to make. However, it's still a very good time for you to, if you've got small size accounts, you can still always raise it to whatever it is you want to raise it to. It's still a very good time for you to keep demo trading. You would have a good time doing all of that. All right. So clearly, we can see here when we are on the feed again. This is quite helping us to be able to measure our expectations. Look at how price reacted to minus 61.8 zone, right? This is our zero point 0.0. This is showing us that, and then price closed below the zero point 0.0 shows, still a sell momentum, just is still. And then if you look at, that's why it's always very good for you to be able to, I might be saying a lot of things, but just try and pick it up. It's always very good for you to be able to use confluences. Use several reasons to be able to pick up your trade, not just one thing that you see. And then if you look at this zero point 0.0 with the horizontal line I drew on what's it called, on trading view, trying to show the resistance point, you can see how very close it is to each other. So you don't just use one thing to make your confirmation of whatever you're saying. A mixture of everything, but not too much anyway, so you don't get confused on the other hand. All right, so for me, I just use trend line, horizontal lines to know support, resistance, and then my fib to be able to at least know the extent of retracement or the push of price at that point in time. All right, and then the candle, this particular candle closed above our minus 20 27. I'm expecting, my expectation right here with what I'm seeing right here is that with this candle closing above, I want a new candle to close to come and then push back to this point. All right. When I have another candle reaching up to my what's it called, to my zero point 0.0, the candle may have a lot of wicks, just like we have candles here having wicks. Forget about, of course, the wicks are important, but my goal is to have the candle close below this point. The body of the candle, just like we have these bodies are closing below this zero point 0.0. If I have a candle giving me a push below this particular candle, closing below this candle, honestly, I'm just going to take another sell. I'm just going to take another sell because we're in a downward structure. And then what do I do? The stop loss, of course, is just going to be above this week right here. The stop loss is going to be above this week. To be safer, which is more recommended, put your stop at least above the next fib level. But I'm on a daily time frame, and that stop loss is going to be too high. If I'm to put my stop right here, it's just going to be too high, and I don't want to. Okay, this is 40 pips on gold. It's still honestly on gold. 40 pips is still quite fair. But going all this route, 95 pips is a very stupid stop loss to set. That's the honest truth. So what can you do? What can you do? Let me clear all the drawings and then go on H4. Still on this same gold. Excuse me. All right, excuse me. I just hope you can see my screen and you can hear me well. Please, if you can't, just drop me comments. I don't want to. All right, so now I'm on H4. I'm on H4 right now, and then of course I've still got my period separators on. I want to see. Also, the same thing applies. Your fib is stronger on the higher the time frame, the stronger your fib is. Your fib levels are. Okay, so this is it. Because it's a downward trend, you draw your fib from top down. You look out for the highest point and then the lowest point in the particular period. The highest point and the lowest point. Okay, sorry, this is the lowest point in this period. I almost missed that out. So if I draw my fib here to here, of course I'll still uh be reading something, but of course it's not accurate. So whatever it is I'm doing, because I didn't pay close attention to see that this is the lowest point, is going to be a wrong way to use my fib at that point in time. All right, so my expectations, and never forget your strong PRZ zones. We've done videos on Fibonacci already, and then you could just watch and refer to that. Okay, so what would be my expectation? My expectation is that at the opening of the market today, right? Price is presently at the 38.2 zone, at the 38.2 region. This is like the strongest, about the strongest Fibonacci level. What do we expect? We look out for. I don't want to trade tonight. I'm not definitely going to do that. But at the back of my mind, I'm looking out for the sell opportunity in this particular market. Sell opportunity in this particular market. About the same thing I'll be doing. Look out for the reaction of price at this 38.2 zone, right? Expect that what once I'm able to have my push, either up or down, whatever, either price gets to your zone, this zone, the 100% zone, you are looking for a sell still, all right? Or price gets to, if price closes beneath any of these strong Fibonacci levels, presently this, and then which one? And that's the 23.6. This is already broken. I'm looking out for what's going to happen here for my 38.2. Trying to see, then have an expectation. What do I do when price, closes just like we have here? If price closes beneath this zone, and then look at the push, look at the push, the bullish push. We know that we're in a downward trend. So your expectation should not still change because we're having this kind of candles. It is always expected. You should always expect that even though it's a downtrend, always expect those pushbacks and all that. But what you are looking for is that particular point where you are going to what sell the market, because what the overall structure is a downtrend. All right. I just hope I close that thought. If I'm missing anything there, please draw my attention to it. Okay, so I'll go back right here. Let me come on the back to trading view. All right, so back to trading view, and then of course you can also use your Fibonacci here. But to be very honest with you, doing your chart analysis on trading view is always the best. I've just been very lazy on using Fib right here. You know, I've been very lazy on using Fib on what's it called, on your trading view, on trading view. All right. So that said, what are the things we should be looking out for right here? Expect price at this zone. You can pick up your entries on H1 also, because don't forget, as you're seeing, a week on a higher time frame is actually a candle on a lower time frame. Okay, but still sticking to the fact that you are looking up from your higher time frame to judge whatever you want to do on a lower time frame. Because I want to make my entry on a H1 time frame now, does not mean that I will be trying to buy this market. No, I'm looking for that sell opportunity, and also to be able to reduce your stop loss that you're setting. I know a lot of traders who say, "Oh, it doesn't matter. Make your analysis on if you make your analysis on D1, enter on D1. If you make your analysis on H4, enter on H4." Uh, why would you want to do that? You are trying to make 40, 50 pips from a particular trade, and then you are setting stop loss of 70, 80 pips because you're on a higher time frame. I think that's not a good way to trade. No matter what you do, you will continue to lose our money. You continue to lose our money. If you look at what we did in the week that just left, that just passed by now, we took just three trades. We had about 60 pips on gold. For those who entered on gold at that time, had about 60 pips on that sell. I think I'll try and go back and see if I can find that. I think we entered a sell for gold somewhere in this region. Somewhere here was where we made that entry for a sell. In this week that just passed by, we entered for a sell somewhere here. Yeah. Okay. Yeah. I found it now. I found it. If you can still go check out on the group, you would remember I was pointing out a trend line to say, look at this. I pointed out a trend line to, excuse me, because we missed the first entry point, which would have been this particular entry. This was a perfect entry. Selling from here was a perfect, as in a perfect entry. But because we missed that, we had to look out for other opportunities to be able to enter. And then we use this particular a break of this trend, a break of this trend, because I would continue to emphasize whenever you are in a downward trend, all you continue just put your attention on every selling opportunity. Every break of an upward structure is another entry point for you because the market is in a what in a downward trend like we had. So I think we made after the break of this particular trend line, we made our new entry somewhere here, and then we had let me measure it. Excuse me, guys. I just hope you're catching something on this particular meeting, right? And then we had it happen to somewhere here. If you have your trade already in 100 thereabout pips, I'm sure the ideal thing we always say is what always ensure that at least for the least put your stop loss to entry. For the least put your stop loss to entry. So we were having an overall expectation that price was meant to come to this point. And then I remember I said it is still on that chart. If you look at it, that if price gets to this particular point, that's going to be giving us 150 something pips. And then I said there won't be a TP2 because that should be a double bottom on the daily time frame. I remember I said that will be a double bottom on a daily time frame. So, and never forget the concept. Once you have a double bottom on the daily time frame, you should expect a buy push because every time you have a double bottom, it tells you that what there's another buying opportunity. That's the implication. I'm sorry, there's a lot of distractions, but please just put your attention on me, and then you'll be able to get through. All right. So the overall expectation was for 157 pips. You know, there's no point trying to max that out. 100 pips in fact would have been an awesome week. And then so for myself, I had about 70 pips or thereabout on that particular trade. And then we had two other trades that both hit stop loss. On NZD card, I think we lost 16 pips. On the other trade, I think we lost about 18 or thereabout pips. So if you still look at it, winning on one trade, and then at the end of the week, you are still profitable. You won one trade, you lost two trades, and then you are still profitable because you are trying the goal is to always ensure that what you keep some money for yourself. The goal is to stay profitable. In fact, if if for a start you could always give yourself that kind of push, like my target is just 50 pips on every trade you are entering, target 50 pips, target 40 pips, and then you're out of the trade, you will discover that at the end of the day you might be doing way better than someone who is trying to catch so many trades at the same time. So that said, if I told you were holding and then wanted to get through till the very end of the trade, I expected that the least I always expect is once you are 30, 40 pips in profit, the least you should do is what? Put your stop loss to entry. It becomes a zero risk trade for you at that point in time. So right here, I think I've said quite a lot, and I've exhausted this particular pair. Let's go on H1 if we can find a point for our entry. You can always find. Never forget, we're not going to be trapped into buying this. Don't be trapped into buying and say, oh, it's an uptrend on H1. No, we're still looking out for a sell opportunity in H1. Don't force it to happen, right? Don't make a force. Don't try to force a trade to happen. With that, you would only be playing nobody but you. So what I'm seeing on H1 is not in confluence with what I've already analyzed. So there's no point trying to force or trying to make a trade happen on H1 if there's no opportunity for that. So what do I do for the week? For this particular week, if I would be trading gold, which of course I will be doing, which of course I will be doing, I won't trade gold when the market opens tonight. I won't trade gold Monday morning, except by Monday morning tomorrow. Price pushes to this zone here. If I see price here, let me mark that out. If I see price, if I see the price of gold here, okay, on this particular horizontal line, this region, if I see gold here tomorrow, that's when I'll be looking at selling. And then my stop loss, no matter what, would just be just about 4 or 5 pips above this particular line. This is where my stop will be. This is where my stop will be. Just few pips above that particular line, right? And then never forget trading on Monday and Friday. If you notice, personally, I don't trade on Fridays. I trade sometimes on Monday, but Fridays I don't trade on Friday. I don't just trade on Friday. You know. So Monday the market is just trying to kick off. But if I see, you know, if by Tuesday morning and then we're already seeing, depends on what we see, and then definitely we'll be able to call that up for a entry, for us to be able to do something. All right. This is how I look at the market. I don't know if there's any question from anyone right now. Anyone got any question? Kindly unmute yourself. The floor is open before I then analyze our NZD card, and then we'll talk about that also. Anyone got any question? Please unmute yourself. If you've got questions,
Hello.
the floor is open. Yeah, please talk to me.
Yeah, hold on. That was a very, very nice one. But on okay, let's say we're analyzing the trade with trend line, right? And I could see that you use some horizontal lines and all that, together with the trend line. Is that another strategy apart from the trend line analysis, or it is combined with some trend line analysis? I mean the horizontal line you drew and all that. Did you get the question? Hello? Hello, are you there?
Yeah, I'm here. I got your question.
Hello? Hello, can you hear me?
I can hear you loud and clear. I can hear you very well. Hello. Okay. This is the answer to that question.
Hello, bro Toby. Are you there?
I'm here. I got to put.
Hello.
Hello. Can you hear me now?
Yeah, we can hear you now.
Yes, we can hear now.
Awesome. This is what I was saying. Trend line, the horizontal. If you know about the principle, the horizontal line I'm actually trying to use to mark out support and resistance.
Okay.
The trend line, we're trying to mark out the trend of the market. That is, we're trying to know, is there an upward trend, a downward trend? Are you getting that? And then
Yeah.
we are not going to never try to go on a trade just because you saw that, oh, trend line is saying this.
Mm.
Are you getting it?
Yeah.
Always use at least 2 to 3 reasons to always enter your trade. Are you getting that? So
Absolutely.
every time you're doing your markup, and then just like the markup I did, the trend line is actually trying to tell a different story, right? Trying to show so at every point in time I know that, okay, this line, when price gets to this particular point, they are actually important price zones. Are you getting it? For that particular point in time, or the and then the horizontal line on the other. So it's a confluence. I'm trying to use the two simultaneously. Are you getting it? I'm not going to say, okay, because price is meant to reverse at a particular resistance point. And then obviously I'm seeing that a trend line that maybe a candlestick is close above the particular trend line. Are you getting? Maybe I'm sorry, my system is hanging. I really can't